Hey, it's Clay, and this will be a video chart on ticker symbol AKER. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I've been doing this analysis on a very routine basis, so that's where these green and red lines are coming from. But after today's price movement, before I go any further, I do want to kind of just note that there's a lot of perspective that goes into this. So from a presentation viewpoint, this is a tricky chart to talk about. Case in point, if you are a day trader and you bought right there, or you bought right there, or you bought right there, and either of those instances you wanted to sell within 20 minutes after buying, then yeah, for you the chart's looking pretty rough. Now, if you care about the big picture of things, yeah, I get it. There was a pullback today. But from the big picture, the bulls still have plenty of opportunity to build a higher base. And when you have higher bases that are being built over longer periods of time, that's how those long-term uptrends are constructed. I'm going to be talking about things from a big picture perspective. So if I sound crazy calling something bullish, my guess would be you just had a different outlook and strategy going into the trade. In order to best do this, I want to just make an adjustment here and really focus on this previous breakout level down here. I think that might be where it bounced from. Almost right here at 60 cents. Why is 60 cents important? Well, it goes to back to a foundational rule in charting, which states when levels of resistance are broken and closed above. So let's just first establish this was resistance. You can see right there, knocked down the price, and then the price struggled right around that area quite a bit. So that was a level of resistance. And then the second part is when resistances are broken, you want to see them act as support. And you fast forward to today, and great action right there. You could throw this right into a textbook classic example of a resistance now acting as support. And the other reason this is so important is it goes back to why I can sit here and say that even after the pullback today, the bulls are still in full control. I'm not saying this will happen, but just for example's sake, let's say the price comes back down here, bounces around, and then starts to work its way back upwards. Emphasis on big picture. From the big picture perspective, what would you still have? Well, you'd have a set of lows there. You'd have that set of lows there. You'd have a set of lows down there. If you picture each one of these as stair steps, so what do you have? Again, emphasis on big picture. You'd still very clearly have stair steps progressing in the upwards direction, and that's the name of the game. That's what truly strong trends do. They just continue to, trend upwards, aka build those higher lows. So focus on building higher lows at this point in time, staying above 60 cents. And as long as the price continues to build those higher bases, then the trend will remain intact. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.